What is the primary residence sale tax credit, and why is it important to you if you're thinking about selling? Hi, my name is Joe Polyak, local San Francisco Bay Area real estate agent with Rise Homes, and I make these videos for you if you are thinking about buying, selling, or investing in real estate here in the San Francisco Bay Area. So what is the primary residence sale tax credit, and why is it important to you if you're thinking about selling your home? Let me begin by saying that I am not a CPA, I am not an enrolled agent, I do not work in the tax profession at all, so you should not consider this tax advice by any means. With that being said, I am a real estate agent. I help people with the sale of their home, and I'm usually involved working with them while they are working with their CPA. So I have a decent idea about things related to selling properties and tax implications. When I first sit down with a potential client, somebody who's thinking about selling their home, first things first, we sit down, we talk about what it's going to take to prep their house, get it ready for sale. But pretty much number two on that list is figuring out how much they're going to have to pay in taxes, if anything, when they do sell. If you're thinking about selling and you're anything like most of my clients, there's a pretty good chance that you paid significantly less for your home than what it's worth today. Most people that I work with have purchased their home maybe 20, 30 years ago. And so a very common example I have is somebody who paid $250,000 for their home back in the 80s, and now it's worth 1.5 million. It's a very common example. Oftentimes there's a little bit of confusion because there's a couple of different pieces of guidance or things involved in selling a property that is kind of common knowledge and people think they know. And so the first thing that people ask me is oftentimes they'll say, wait, can I just roll it over to the next house that I buy? And the answer to that is, if it's your primary residence, the answer is no, you cannot, because the 1031 exchange, which I talked about in another video, which is the rollover where you can roll over your capital gains in a property. So for this example, you bought a home for $250,000. Let's say that you spent $150,000 to remodel it. You remodel the kitchen, you remodel the bathrooms, and you have remodeled over the years, and you put in about $150,000. So your cost basis in theory would be about $400,000 on the property. Now, if you're selling it for 1.5 million, if you subtract, let's say roughly $100,000 for commission and any other closing costs associated with the sale, then you are looking at a $1.4 million net. So that means that at a $400,000 cost basis, you have $1 million gain. Now, if you're doing the 1031 exchange, you can roll that over. But if it's your primary residence, you're not allowed to roll that over. That's only allowed for investment properties. For a primary residence, the IRS allows you something else, and that is the primary residence sale tax credit, which is they will allow you to tack on an additional $250,000 if you're single, or $500,000 if you're a married couple. You can tack that on in addition to your cost basis. So in this example, your cost basis being $400,000 and the sale price 1.5, closing costs and commissions brings it down to 1.4. You can add, if you're a married couple, $500,000 to that $400,000 cost basis. Now your cost basis is $900,000, sale price $400,000, so you would owe taxes on that difference of $500,000. This is just a very basic example, and of course you have to talk to your CPA and take your time with your CPA. I just give a rough estimation and a rough explanation based on researching and working with people over the years, but your unique situation is going to be much different, and the person who's familiar with the taxes that you've been filing all these years is going to be the person who's best equipped to help you with this, because they're also helping other people who are going through this exact scenario. There's a couple of different caveats. Let's say you rent one part of the house and you live in another part of the house. Well, then you could, in theory, qualify for a partial exchange and a partial primary. I don't know the exact details of how that works. Again, that's something that you need to go through with your CPA to tell them exactly your situation, and they can walk you through that, because in theory, they're the ones who are going to be representing you through a potential audit situation. I hope you found this video enjoyable, and I hope it was helpful for you. Please don't forget to subscribe to my YouTube channel, like, comment. If you're watching this on IGTV or Facebook, please feel free to share it or comment. Let me know your thoughts. And if you're thinking about buying, selling, or investing in real estate here in the San Francisco Bay Area, or really anywhere in the country, because I work with a lot of good agents all throughout the country and I'm able to refer you to somebody great wherever you're looking, please don't hesitate to reach out. My number is 415-595-2647. My email address is joe@homesbyrise.com.